You guys ready to get started?
Yeah, absolutely.
Excellent. Okay, we're on session 11. So this means that session 12 will be Tuesday, and we'll be doing the exclusive right to sell listing contract. So that's what we have on Tuesday. And then Monday, Monday, I believe, is session 7 for those who are on that cycle also. So I think Monday is session 7, which is day 1 of Colorado. And Tuesday is session 12, which is the last day of Colorado. So Sam, what is the exclusive right to sell contract?
It is the contract that is between the brokerage and the seller, or the broker and the seller, so that the broker can represent the seller through a transaction.
That sounds really good. It's the contract between the employing broker or the brokerage and the seller, and it gives us the right to represent them putting their home on the market. That's really one of 3 contracts we use a lot. We use the exclusive right to buy when we're representing the buyer, and we use the contract to buy and sell when the buyer and the seller are making a contract on a property between each other. What documents should the listing broker keep and for how long? So first of all, how long should we keep documents according to the Real Estate Commission? Tyler?
4 years.
4 years, good. So the exclusive right to sell listing contract plus copies of all pertinent documents signed by the client. Files must contain copies of closing statements. They may or may not also include deeds and the deed of trust or title work. So and of course we need to keep them for 4 years. The Real Estate Commission maintains a link on its website of required documents. So from time to time, they update that link telling us exactly which documents we need to keep. But pretty much we know we need to keep anything that the seller signs or really should have signed. What is conversion of funds? Have you heard of that term before? And CJ, have you heard of the term conversion of funds?
I have not.
Okay. Tyler?
No, I guess maybe you're just turning money into something else, right? Or converting it into something.
You're getting close. I like the way you're working with those words. Sam?
I mean, I've read it, but I don't understand it. So
That's okay. And then James? No?
I'm pretty much right with everyone else. Just
Okay, so it's a term. It's when a broker, generally acting as a property manager, pays one client's expenses with the funds from another client. It is illegal. So the term conversion of funds is when we're paying one client's expenses from money from another client. Okay. So this can happen when we do a bad job of managing our trust accounts, also known as our escrow accounts. So Sam, what's a trust account or an escrow account?
it is where the money's basically not, I wouldn't call it down, kind of like it's not down payment, but it's where the monies that are put in are put into a separate account, a third account, so that they are exclusively for that transaction.
Good. Yeah, everything you said is true. I like to simplify it a little bit and just say it's everything. I like what you said. A trust or an escrow account is an account we establish where we put other people's money. So it's not our money, it's their money. So it's not money they paid us, it's money we're holding for them for a specific reason in the contract. Like if a buyer gives us earnest money, that's their money. That's not in any way our compensation. So we would put the earnest money in a trust account. Another name for a trust account is an escrow account. And in the case of earnest money, most of the time the title company sets up escrow accounts or trust accounts for earnest money. In the case of a property manager here, you know, we might collect a tenant's security deposit. That security deposit belongs to the tenant, and so we would need to place it in a trust account or an escrow account. Those two words mean the same thing in this context. So by putting it in that account, we have a higher level of duty to that tenant because we're holding their money. The Real Estate Commission has really strict rules about trust accounts and escrow accounts. Okay, Tyler, go ahead and read this question and then answer it.
What type of trust account is required for a broker that manages 10 rentals? Management trust account?
Yeah, so a management trust account. So if we're managing rental properties, we're acting as a property manager, and therefore we must have a management trust account. So the very fact that we're talking about trust accounts should be a good trigger for you all to know that trust accounts are really important for the Real Estate Commission. Okay, I mean, anytime we're holding other people's money, they're going to be really suspicious of us because, you know, Lupe, what's the purpose of the Real Estate Commission?
Is to regulate the real estate agents?
That's pretty close, and it's certainly true. Their job is to regulate the real estate agents, but for what big purpose? For what greater purpose?
Is it like to make sure that they're following the rules and regulations of real estate?
They do, that's true. I want you guys to link in your minds that the purpose of the Real Estate Commission is to protect the public. Okay, so just write that down. The purpose of the Real Estate Commission is to protect the public. And Lupe, who do you think they're protecting the public from?
It's from fraud or any illegitimate.
Sure, but what people, the Real Estate Commission, their mission is to protect the public. Who do you think the Real Estate Commission is most worried about? What group of people worries the Real Estate Commission the most as they think about how do we protect the public?
Is it like predatory lending or wait, no?
Well,
Bad brokers.
I think they're worried about predatory lending, but the Real Estate Commission is most worried about real estate licensees.
Oh,
So,
okay.
and that's why they keep an eye on us, especially when it comes to trust accounts, but certainly with anything to do with license law and agency, they keep an eye on us. And so the purpose of the Real Estate Commission is to protect the public, and they protect the public through their regulatory enforcement of license law. Who must hold security deposits if the lease does not state this information? So we have a situation where we have a landlord and we have a property manager who's a real estate licensee who works for the landlord. Of those two, who must hold the security deposit if the lease does not state that information? CJ.
I'm sorry, can you ask that one more time?
Yes. So in this question asks, who must hold the security deposit if the lease does not state this information? So we got it narrowed down to two parties: the property manager, who's the real estate licensee who works for the landlord, or the landlord. Either of those entities could really be one of those two people is holding the security deposit for tenants when they're renting a property. The real estate commission says one of those two is required to hold it if the lease does not say who's holding it in the trust account.
I would say the broker.
The broker. That's right, and not the owner. Now, CJ, why do you think the real estate commission would want the real estate licensee, known as the broker, also known as the property manager, to be the one who's holding the earnest money as opposed to the owner?
Because the real estate committee can affect the broker and not the owner.
Exactly, because the real estate commission can mess with our license. So if we're not appropriately managing that money in the appropriate trust account with the appropriate controls on that trust account, which we're going to talk about here shortly, then the real estate commission can do things like require us to get additional education and suspend our license or revoke our license if we have commingling of funds or conversion of funds. What is a trust account and who may have them? Okay, James, what's a trust account and who may have them?
A trust account where somebody else's money is held. And in our circumstance, it's basically going to be the real estate licensee that's going to hold it.
Okay. So you're half right. A trust account is an account used by an employing broker or an independent broker or a title company, not associate brokers, to maintain monies that belong to a customer or a client. So, Tyler, as the five of you guys finish up this course in the next couple weeks, and as you pass the state exam through PSI, you will all receive a license from the Real Estate Commission. Tyler, what are the 3 licenses the Real Estate Commission, issues?
So to be your independent broker's license,
Okay, that's
employing
one.
broker's license,
2.
and then is it like sales associates broker or associate
It's
brokers?
don't use the word sales associate.
Okay.
It's just associate brokers.
Associate broker. Okay.
Yes. And the order that I like those from my memory is associate broker is 1, employing broker is 2, and independent broker is 3. Okay. Associate broker, they all require the same amount of education, which is this 168-hour course. Okay. So we're in a 168-hour course. Now, after an associate broker has had their license for 2 years, and after they filled out this metrics, it's a rubric made by the Real Estate Commission of transactions and continuing education. And after they've continued the broker administration test, then an associate broker can move to either an employing broker or an independent broker. So, Sam, what's an employing broker?
The employing broker is the broker who has associate brokers working for them.
Perfect. And James, what's an independent broker?
An independent broker would be someone who is out practicing on their own. They don't have anybody working for them, but they don't work for anyone except themselves.
That's exactly right. So an independent broker can have non-licensed people working for them. but they can't have any licensed real estate people working for them. So James, after 2 years, you decide to become an independent broker. You set up James's real estate firm, and you could be an independent broker, and you can and that works just fine. Or you could work and get your employing broker's license, and you can hire a whole bunch of broker associates or associate brokers to work for you. Okay, so a trust account is an account, and they're only held by the employing broker or the independent broker. Okay, the real estate commission does not trust associate brokers with trust accounts. Now, the good news is, so that's good news, because as you guys are associate brokers, you don't have to worry about setting up a separate bank account and following the special rules that come with setting up a trust account, because there's a lot of rules there because it's other people's money. So you don't have to worry about that. The other good thing that's really happened in the marketplace is, title companies have really taken on the role of having trust accounts for us. Okay, so even if you become an employing broker, there's a good chance you won't ever need to set up a trust account, because you'll just have your favorite title company set up trust accounts really for you. Okay. It's an account that must be established prior to the broker receiving money. So the real estate commission says, okay, you have to set up the account, and then you can receive other people's money. So you can't receive their earnest money and then, as an employing broker, set up a trust account. It must be set up in advance. Okay, the real estate commission doesn't like us to be carrying around other people's money. They want it in a safe account. Trust accounts can collect interest if all the parties know. So that when we say all the parties know, that's another way of saying disclosure. So we know in real estate, the term disclosure is really important. And that's when everyone knows something and everyone is told something. So that's a really important word. And we know, for instance, material facts and latent defects have to be disclosed. So that's an example of disclosure. So if we collect interest, a trust account can collect interest if all the parties know, or if the interest is donated to a designated nonprofit housing opportunity fund. So in Colorado, we're fortunate we have a really good nonprofit housing opportunity fund called CAROFF. And that's the Colorado Association of Realtors Housing Opportunity Fund. So if you're a realtor, you can, the earnest money, the interest from earnest money can go into CAROFF. Okay. Okay, so let's review back just a little bit. As I say these words, I want to make sure you guys are all processing. So Tyler, what's the difference between a real estate broker and a real estate agent and a realtor? So everyone write down those three things. We have real estate broker, and then we have real estate agent, and then we have realtor. And then after Tyler gives his answer, Lupe, you'll make it a little bit better, and then CJ, you'll finish it up for us. Okay, Tyler.
Okay. All right. So I know realtors, like a membership that you join, you pay a yearly fee, and then you can call yourself a realtor. So it's like a club.
Okay. So realtor is a title you get from being in a club. What group did you join, Tyler, to become a realtor?
It's like the Realtors Association.
Yes, that sounds perfect.
Okay.
So by joining the Realtor Association, you get to use the word realtor. And realtors then they have rules on ethics that you must follow. And they also provide additional support like training and education and so forth. So if you're a realtor, then you belong to the National Association of Realtors, you belong to the Colorado Association of Realtors, and you belong to your local board of realtors. To belong to those entities, you know, it's going to cost you about $450 a year. But there's a lot to it. It's kind of like being in the in-group. And so it's generally very much recommended. Okay, so that's realtor. Continue, Tyler.
Okay, so then a real estate broker is going to be someone who can do business in real estate, right? And then an agent would be someone who has a specific task.
Okay, real estate broker in Colorado. When we get our license and we're a licensee, we're a real estate broker, because we know we're either an associate broker or an employing broker or an independent broker. So in Colorado, if you get your license, you're a real estate broker. Now, the next one is real estate agent. Go ahead, Tyler.
So real estate agent would be someone who performs a specific task, like I'm going to sell you a home, or I'm going to help you buy a home.
Okay, that's really good. I like the way you took us through a lot of this. I'm going to go ahead and ask Lupe to give us more information so she gets a turn too. Lupe, when I say agent, what's special about agent? What's special about that word agent, and what's that really conjure up for us? What's that really mean for us?
So the agent is like a coach. It represents only one party of the transaction and owns fiduciary duties. And in section 5 and 6 on the exclusive right to sell listing contracts, and assign the agency agreements as needed for her to be an agent. That's my
Lupe, that was a kick butt answer. Nice job. That was really perfect. So we know that when on the exclusive right to sell and on the exclusive right to buy, the first check boxes at the top of those agreements say, are you an agent or are you a transaction broker? So that's the first thing we have to have a discussion with our customer and our client. Are we an agent or are we a transaction broker? If we sign up to be an agent, then as Lupe says, we have fiduciary duty, and section 5 and section 6 of that contract apply. And section 6, Sam, in the exclusive right to sell, what does section 6 say?
Section 6 talks about the fidelity and, let's see, the loyalty, the faith, the marriage contract.
Okay, so I'm going to want
between the broker and the customer.
That's right. You're exactly right on. I'm going to want you guys to go ahead and memorize section 6. So section 6.1 is what I call the marriage vows. And it says an agent has utmost good faith, loyalty, and fidelity. Okay, utmost good faith, loyalty, and fidelity to his clients. That's 6.1. So that's really big. I mean, utmost good faith, loyalty, and fidelity, that's a lot. That's why I call those the marriage vows. 6.2 says we have to seek our clients' terms and prices. And 6.3 says that we have to counsel, like a counselor, our client as to material benefits and risks. So those are the those are the three differences between broker, agent, and realtor. What are the types of trust accounts and how many may a broker have? So we have a sales trust account, a management trust account, a security deposit trust account, an advanced rental trust account, and an owner's association trust account. So, you know, there's 1, 2, 3, 4, 5 different types of trust accounts. Depending on which money we're receiving on behalf of that client of ours. Now, the brokerage may have as many or as few accounts as the firm needs to keep the monies appropriately separated in the appropriate accounts. For testing purposes, the number of trust accounts is determined by need or as many as needed to ensure the funds will not be commingled. Okay, so that's for the test. The number of trust accounts is determined by need, as many as needed to ensure that the funds will not be commingled. How do brokers protect the integrity of trust accounts? So number one, so make a note, how to protect the integrity of trust accounts. Number one, monthly reconciliation to bank statements. Number two, open access by real estate commission to check and audit the accounts. So the real estate commission can come in and audit your trust accounts at any time. And the reason they can, because that's money that belonged to others. Number three, outside audits. You can have an auditor come in or a bookkeeper come in and make sure your trust accounts are good. Number four, separation of duties, meaning the person who receives money that belongs to someone else isn't the same person who deposits the money. That's called separation of duties. So there's an extra set of eyes. And then the real estate commission wants you to know that at any time you can ask them for assistance. And if you go seek their help, they won't ding you. But if they check your accounts and they're messed up, then they're definitely going to ding you. They take trust accounts very seriously because their number one mission is to protect the public, and you're holding the public's money in your trust accounts. What has to be on the trust account? So the real estate commission is really specific about how the trust accounts are set up and how they're labeled. The brokerage name and the type of trust account has to be in the title of the trust account. The brokerage name and the type of trust account has to be in the title of the trust account. So if we go set up a trust account at First Bank, it would be ABC Real Estate Brokerage Firm Sales Trust Account or Sales Earnest Money Trust Account. And that would be the name of the trust account. And we would need to make sure First Bank knew we were setting up a trust account, because the banking industry has different rules around trust accounts also, okay? Whenever we have a trust account, we do have a fiduciary duty. And we know fiduciary duty means we have to put the other person before ourselves. That's what fiduciary duty means. We have to put the other person before ourselves. So we need the brokerage name and the type of trust account. Unless the independent broker establishes a trust account, then it would also have her name, okay? So if it's an independent broker, it would have the brokerage name, the independent broker's name, and the type of trust account. When must earnest money be deposited into a trust account? Lupe, when must earnest money be deposited into a trust account?
He has to be deposited within the 72 hours after they accepted the contract, or 3 business days.
As Lupe says, earnest money must be deposited into a trust account within 72 hours or 3 business days. When must property management funds be deposited into a trust account, Lupe?
Those are 5 business days.
Within 5 business days. So we have earnest money within 3 business days, property management funds like rental security deposits within 5 business days. What happens if a broker cannot attend closing and asks another broker to take his place? Both brokers, the one who could not attend, plus the one who attended, plus their employing brokers are responsible for the closing and all closing documents. So all the calculations, the accuracy of the legal description, and so on. So if I'm a real estate broker and I can't go to closing and I say, James, go to closing for me, and James says, sure, I'll do that for you, and James goes to closing, then I'm responsible that all the numbers are right. James is responsible that all the numbers are right. My employing broker is responsible, and James's employing broker is responsible. What are the proration rules on the Colorado side of the state exam? Okay, Sam, I'm talking about proration. So as you see that question, what's that question mean to you?
When you have to, is it for tax purposes or no?
Mm-mm.
Oh,
When we say proration, what are we talking about?
oh, like if the day of a closing, whether it is on what day, and then how payments are broken out.
Okay, you're right on. Let's break that down a little bit. So you said something, you said the day of closing. Why did you say those words? Day of
Because
closing.
that's the day of the closing is when the sale happens, is official.
Okay, that's true. And what's that have to do with proration?
Because whatever, and I think of taxes, whatever funds are owed to that day of closing, one goes to it's split between the buyer and the seller. Correct.
Okay, that sounds good.
You have to have a calendar, correct, on where it starts and where it ends.
Okay, that sounds, I'm totally reading your mind. I'm right with you. But I want us to put it in really, let's see if we could put it in really clear language. Tyler, give it a try. What are we talking about here? And everything Sam said is right, but let's see if we can give it some more words.
So I guess it's like the specifics of how many days would be in a month and a year. So like the Colorado side for months would be however many days are in the month, but the national side would be 30 days per month.
Okay, that's good. Now take me a half a step back, Tyler.
Okay.
And make it a little bit broader. So before we get into, for what purpose are we prorating? What is this even all about? Go broader. Go broader.
Yeah. So like when I think of proration, I just think of like times I've gotten like a prorated rent rate on a month. So it's just like you're paying for how many days you're in that unit, essentially.
Perfect.
So it's like if you're only going to be there for 20 days, you shouldn't have to pay the full month. You'd pay the 20 days.
Great. And then
but the seller would pay the other portion, that 10 days right? Like an offset.
Perfect. Okay, I think that sounds good. James, does all that make sense to you?
Yes, sir.
So we're talking about the closing, and really we're talking about the prorating between the buyer and the seller, and who's going to be responsible for what bills and how much of what bills. And things like, and Sam immediately goes to property taxes in his mind. And he knows that property taxes are prorated. And we know that we may have HOA bills prorated. And we know we may have anything else that is could be a shared expense or a monthly expense or an annual expense. We know will be prorated between the buyer and the seller. Now, CJ, what else would you, to take this just a little bit further, what would you add to this, CJ?
Let's see. I guess not really sure.
Okay, that's all right. Lupe, can you tell me the specific Colorado rules now for prorating? And then you may want to distinguish those or compare them to the national rules for prorating.
So in Colorado, is it 365 in a year? With
Yep,
30?
so stop there so the guys can catch up. In Colorado, we prorate to the actual calendar year. So 365 days, unless it's this year, then it's 366. How is that different from national, Lupe?
It's the national has 30 days. Wait,
30 days of what? In a month or a year or what?
No, 30 days a month.
A month. And how many days in a year?
360.
Exactly. So Lupe now says in Colorado, we prorate to the actual number of days in the month. So February has 29 days, then we're going to prorate to those 29 days. In the national section, when we're practicing proration, we pretend every month has 30 days, and we pretend that a year has 360 days. Okay? Now, who owns the day of closing, Lupe? That's another difference.
The seller owns the date of closing.
In Colorado or national?
In national.
In national. Who owns the day of closing in Colorado?
The buyer.
The buyer. Okay, so in Colorado, we use the exact number of days, 365 or 366. We use the exact number of days in the month, and the buyer owns the day of closing. So the buyer has to pay property taxes for the day of closing. Even if they close at 5 p.m., they have to pay for property taxes for that full day. Even if they close at 11 p.m., they have to pay for property taxes for that whole day. Okay, those are the rules for Colorado. Now make a note that the rules for national is 360 days in a year, 30 days in a month, and the day of closing belongs to the seller. Okay, this is one of the few places where national and Colorado are different, and so that's why I like to spend some time with it. You're going to have to do prorations for both tests, the national test and the Colorado test. And then those two tests are really the two parts of the state exam, the national part and the state part. Okay. So here's a really good graphic. So national exam, 360 days in a year, 30 days in a month. Party who owns the day of closing is the seller. Colorado exam, 365 days, actual number of days in the month, and the buyer owns the day of closing. Tips for closing proration questions on the Colorado exam. Prorations are always between buyer and seller, okay? The dollar amount of the credit or debit is the same. Draw a timeline and determine who owes whom. First of all, who's gonna owe whom money? Is the buyer gonna owe the seller, or is the seller gonna owe the buyer? Does the party who owes have more days on the timeline or fewer days? Are we looking for a little number or a big number? Okay. So the debit, when we do our debit and credit entries, it's going to say something like debit seller. So Tyler, go ahead and do this for me. We have a purchase price of $500,000. Okay, everyone write that down. Purchase price, $500,000. And Tyler, what's the debit credit entry?
Would it be debit seller 500,000, credit buyer 500,000?
Sam, what do you think?
That I think that was right.
And Lupe, what do you think? Purchase price 500,000.
Oh my God, we have that scenario last week, but I can't find my notes. But I do remember we have it.
Well, just tell me from your brain.
Well, it's 500,
Mm-hmm.
500 debit the buyer,
Good.
and it's 500,000 minus closing costs, I think. From
No,
the
no,
seller.
no.
Okay, 500 the seller.
Right. Okay,
Okay.
so the debit, so let's read this together, okay? Prorations are between buyer and seller. The dollar amount of the credit or debit is the same. So if we have purchase price, we have credit seller 500,000 because the seller's receiving 500,000. We have debit buyer 500,000. So you can see 500,000, 500,000. The buyer's giving the seller 500,000. So debit buyer 500, credit seller 500. Okay.
So I just got the credit debit mixed up then.
Yes.
Okay.
And remember, credit's receiving,
Okay.
debit is paying.
The debt, basically. So the buyer's going into debt, which is debit.
Okay. So I'm looking for a volunteer. I'll read the question and then I'm gonna look for a volunteer. What is the proration posting, meaning debit credit entry, between buyer and seller for property taxes with an August 20th closing in Colorado when last year's property taxes were $892? So we've agreed to use last year's taxes for our proration. Now, first thing, Sam, are taxes prepaid or taxes in arrears?
In arrears.
In arrears. Good. Okay, now I'm looking for a volunteer.
You got to know the number of days in August.
This is Colorado.
This is Colorado. Yep, this is Colorado.
There's 31 days in August.
Did you guys need to know how to do that? You can use your knuckles to help out.
Back over there.
So January, February, March, April, May, June, July, August, September, October, November, December. So all the knuckles have 31. So January, February, March, April, May, June, July. July and August are both 31. September's 30. October, November, December. There's also a rhyme. Okay, I'm still looking for a volunteer.
Got the number.
Okay,
But
let's go and answer some of these questions first. Okay, are we gonna have a debit to the seller or a credit to the seller, James?
We will have a debit to the seller, I believe, and a credit to the buyer.
Okay. Sam, do you agree?
I might as well agree. No, I know I don't.
You don't agree? Okay, well, you want to go with James. James is right. Just a rule of thumb, let's go with James. Okay, Tyler, do you agree? Debit, seller, credit, buyer?
Yes.
Okay, now, so that means the seller's gonna owe money, right, to the buyer? Okay, now, August 20th, is that, so seller's gonna owe money, and he's gonna owe money from when to when, Tyler?
Is it August 1st to August 20th? No, it'll be August 20th to August 31st.
Okay, I don't like your answer.
No, it's because he was there the first 20 days, so it'd be August 1st to the 20th.
Okay, so let's just go ahead and clear up one thing. The day of closing belongs to who?
Buyer.
So August 20th, the buyer's paying or is responsible for that day. Okay, CJ. The seller's responsible for property taxes for what days?
So if the seller is responsible up until closing.
Yep.
Okay.
So so what days are these?
So August 1st to the 20th, or is that what you're
Okay.
asking?
Well, I think you know what I'm asking. Lupe, I don't think these gentlemen are very close yet to the right answer. What do you think? The seller's responsible for property taxes for what days, Lupe?
Is it for like the beginning of the year through closing, which is like what, like 200 and something days?
Okay, you're good. You're good. So, but to what dates?
Are you talking about?
Okay,
like
so
are
like,
you talking about the Juilliard calendar?
No, just our regular calendar. Is that the calendar we use, CJ?
The Julian calendar? I think
Just
it's.
what's the regular calendar called that we use? I don't know. Is that I don't know. Is that
No, that's just how many days. It doesn't have the months or anything. It just goes by days.
Oh, okay. Yeah, we're gonna count days for sure. Okay, so the seller is responsible for property taxes January 1 through August 19th. Do you guys agree?
Yeah.
Why isn't so? Because 2020 property taxes are paid in 2021, right? And that's why they're in arrears, like Sam said. They're not paid in advance. They're paid after the fact, meaning in arrears. That's why the seller is going to owe the buyer property taxes from January 1 to August 19th. Okay. You guys agree?
Yep.
Okay, good. So let's take 892 and divide it by 366 because it's a leap year. And what do we get for our daily amount?
so 2.4438,356.
Okay, 2.4. Go ahead, read it to me, Lupe.
2.4438,356,164.
Okay, 2.443835. We'll just go to that. We'll just go that far out. 2.443835. Do you guys agree? Does everyone agree or disagree?
I have a bit of a discretion.
Okay, James, what did you get?
Well, technically, we would be prorating on last year's taxes. So last year there was 365 days, right?
Okay, no, so I'm glad you brought that up. We're just using last year's dollar amount,
Okay.
but we're going to use this year's days.
Okay.
But that's really funny because that almost, that only happens once every 4 years. But that's funny. Oh, Lupe.
Okay, so she did it off of 365 days. So it'd be
Right.
2.4371.
Okay, let's just pretend that it was 365 days instead of 366 days, because when I wrote this question a year or two ago, I was naturally thinking that it wasn't a leap year. So we'll go with 2.44383. So seller owes, and then let's count the days. We counted the days, and it'd be 231 days. The daily rate is 2.443835. You multiply the number of days by the amount per day, and we have $564. And that's debit to the seller, credit to the buyer. Okay, gentlemen and lady, look at that and make sure you can do it.
Quick question.
Yeah.
Where did you get the 231? I know you can figure it out, but
Oh,
is there an
good.
easier way to get to the number of days?
No, there's not an easier way to do it. So January is 31, then 28, then 31,
So go
then
through
30.
Okay.
Yeah, there's not an easier way to do that. So you would have wrote it just like that. So you're going to need to know how many days are in each month. So now we have debit seller 564.53, credit buyer 564.53. CJ, make a note that 564.53 is the same for both parties. Okay, half the questions will have the debit amount and the credit amount as different amounts. That's good news because we know those are automatically wrong. Don't immediately discount those. We know those can't be right. Now, if the debit amount and the credit amount are not the exact same amount, then those are automatically wrong. Does that make sense?
Right, it does.
Now, if we were given a multiple choice and we had 564.53, we knew that was more than half the year. We knew it was going to be debit seller. So there's a good chance we wouldn't have had to do the math if this was the only answer that made sense, that it was going to be debit seller, credit buyer more than half the year. So a lot of it you could just do intuitively without having to do the math. But of course, you're welcome to do the math to confirm your answer. But sometimes the math can just confuse you. Okay, the buyer's new loan. Before I do the buyer's new loan, Tyler, these prorations are determined through what's called a 6-column worksheet. Okay, what are the 6 columns, Tyler?
Is it the one that had like just like the buyer seller debts on the top? It was like 3 times for each one.
I don't like it.
Yeah. No. Okay.
Lupe, what are the 6 columns to the 6-column worksheet?
Is it a graphic where the buyer, sellers, and title company fees are disclosure? Or
Good, and it's not a graphic really. It's a spreadsheet.
okay.
Okay, So it's where we calculate all the numbers that happen in a transaction. And the good news is title companies do this for us. 25 years ago, we had to do this ourselves. But now title companies do all these numbers for us. We're still 100% responsible for the accuracy of the numbers, but we don't have to do these 6-column worksheets anymore. 23 years ago, when I got my license, I had to do a 6-column worksheet in order to get my license. So all the prorations, all the debit credit entries are determined through a 6-column worksheet. The 6-column worksheets, Lupe, what are the 6 columns again?
It's the buyers, sellers, and title fees amount.
Okay, you're close. Tyler, can you say it more clearly? What are the 6 columns?
So it'll be the buyers, sellers, and brokers, debits and credits.
Yes. So we have the buyer has 2 columns.
Yeah.
The buyer has a debit column and the buyer has a credit column. Sellers have 2 columns, a debit column and a credit column. And the broker, who's represented by the title company, has 2 columns, debit column, credit column. The broker, their job is to represent all third parties, appraisers, attorneys, the county, the home inspector, the roofer, because we don't want debits and credit columns for all those people. So the broker stands in and it does the debit credit entry for all third parties. Okay, now we know we're gonna have a debit credit entry for the buyer's new loan. The buyer is gonna get a loan. What's the debit credit entry for the buyer's new loan, Sam? So we're gonna have, who are the 2, first of all, who are gonna be the 2 of the, so you know the 3 parties are buyer, seller, broker. So,
the buyer and the broker.
good. So we know it's between buyer and broker because the buyer's new loan has nothing to do with the seller. Okay, so let's just
So the buyer would have the credit. Buyer's new loan would be a credit, and then it would be a debit on the broker side.
And James, do you agree?
I do.
Yeah, you always want to go with Sam on these things. He's right. So credit to buyer, debit to broker. So the buyer's receiving the money, and that's why it's a credit. And it's a debit to the broker because the broker's paying it. The broker's just pretending like they're the buyer's lender. You know, the broker pretends to be all third parties. So it would be credit, buyer, debit, broker. CJ, would it be the exact same amount for the credit and the debit?
Yes.
Thank you. Okay. Tyler. No. CJ. What is the credit debit entry for earnest money? So let's just pretend earnest money is $10,000. Okay, what's the debit credit entry?
So that would be 10,000 debit to buyer and 10,000 broker credit.
Okay. And Tyler, do you agree?
No.
No. Okay. What do you think, Tyler?
Be opposite. So the buyer would get the credit, the broker would get the debit.
Sam, what do you think?
I'm with Tyler.
James?
On the earnest money,
Yes.
I would believe that the money would be a debit to the buyer and a credit to the broker.
That's what CJ said. Lupe, we got 2 saying one thing and we have 2 saying the other. You're the tiebreaker. Whatever you say is how we're going to do this, okay? For the
Okay, let's do it. I think I'm going to go for what Taylor said. It's credit the buyer and debit the broker, the
Okay,
earnest money.
yeah, so now let me explain why for James and CJ. This is at closing. So we're talking about at closing. So what you guys didn't take into account is the buyer already has the money deposited in a trust account. So they're going to be receiving that money back at closing because it's their money, and they're going to be receiving it from the broker. Okay. So CJ and James were thinking, oh, the buyer pays earnest money, and that's why it should be a buyer debit. But this is at closing and not at the beginning of the transaction.
That makes more sense.
Yeah. So that's a really understandable mistake. Does that make sense, James?
Yeah, absolutely.
Yeah. And so here's what I want you guys to know about earnest money. As you can see, it's coming back to the buyer. The buyer can use that money for whatever they want at closing. Normally, they apply it to their expenses, but if they don't have expenses, then it could be applied to their down payment. But let's say they're a VA buyer and they had the seller pay all their fees for them. Then in that case, the buyer's earnest money would come back to the buyer in the form of a check. Okay, if it's a VA buyer, 0 down payment, and the buyer in the contract asks the seller to pay all his fees, then the buyer's earnest money could come right back to the buyer in the form of a check. Does that make sense? I mean, really, I gave you the most unusual circumstance, but just keep in mind that that's the buyer's money coming back to the buyer. Typically, the buyer spends it at closing on their costs or down payment, their fees or their down payment. Okay, what is the credit debit entry for the lender's title insurance policy? So Tyler, first of all, what is the lender's title insurance policy?
It's the insurance policy that the buyer buys for the title company.
Buys from the title company. For what purpose?
That they're good on the money, that they'll be able to pay.
Sam, help Tyler out. What is the lender's title insurance policy?
It ensures that the title will be passed on without encumbrances.
Mm-hmm. Right. And who pays for it, Sam?
The buyer does.
And who does it protect?
It protects the lender.
Perfect.
Because they own the title until they hold the title.
Perfect. And I can see that makes perfect sense to you, Tyler.
Yeah.
Okay, so now the credit debit entry. Go ahead, Tyler. What's the credit debit entry for this?
Okay. So the buyer would be debited and the broker would be credited.
Okay, Tyler says debit, buyer, credit, broker. James, what do you think?
That's what I was thinking as well when it first came up. So that's what I'm gonna have to go with, I think.
You're gonna go with Tyler?
Yeah.
CJ, what do you think? You guys are too much fun. I'm having too much fun with you guys.
This is a trap.
What's that?
This is a trap.
No, it's not a trap.
I would say it is a debit to the buyer and also a credit to the broker.
You guys are right. So the buyer's paying for it, so it's a buyer debit, and it's a credit to the broker, and then the broker then just hands that money off to the title company because the broker acts as all third parties. Okay, what is the document fee? In Colorado, there's a fee which Colorado charges and it's 1 cent for every $100 of the purchase price. In Colorado, Colorado charges something called a document fee. It's 1 cent per $100. For example, if someone were to buy a $213,000 condo, the document fee would be $21.30. Okay, and it's so. Sam, I'm going to take this to a high level here. Let's say you're working with a buyer, Sam, and they're buying a $650,000 house. Okay, what is the document fee and how will it show up on the 6-column worksheet as the debit and credit entry?
It'd be a $65. Well, I forgot what you said the total was. I know it's 607,000. So
650,000.
So it'd be $65, and it would be a debit to the buyer because they owe the
Credit to who?
Credit to the broker because it's the seller's, because it's a credit to the broker.
Yeah, and then the broker then, which is really the title company is sitting in for us. And then they would write that $65 check to the state of Colorado Treasury's office because that's what it is. And you got it exactly right. Debit, buyer, credit broker, $65 if it was $650,000 property. CJ, did all that make sense?
Yeah, I did. I was a little behind there.
Yeah, well, Sam knocked it out of the park. That was really good. What is the debit credit between buyer and seller for holding security deposits at closing? So I'll give you an example. So Lupe, you're representing a buyer and your buyer is buying a fourplex. Each of the 4 units has $2,000 in a security deposit, also known as a damage deposit. What's the debit credit entry at closing, Lupe?
It said credit the broker and debit the buyer. No,
Okay.
wait.
So I'll say the question again.
Okay.
So you're representing a buyer.
Oh, a buyer. Okay.
Your buyer is buying a fourplex. And you don't need to know how much the fourplex is, but it's 1.2 million. And you don't need to know what your commission would be on that, but it'd be $36,000.
It's nice.
So yeah, that's a good day.
Yeah.
So your buyer is buying a fourplex. The security deposit for each unit is $2,000.
Oh, each unit.
Okay, each unit it's $2,000. And so you're looking at the settlement sheet, which was, created from the 6-column we're talking about. And on the settlement sheet, you're going to be looking for a debit and credit entry for the security deposits. And you'll be debit someone, credit someone.
So it'll be credit the buyer, the $8,000 for the security deposit for each one of the units, and debit the seller.
And James, do you agree that it would be a debit seller $8K, credit buyer $8K? You do, okay. CJ, do you agree?
I do.
Tyler,
Yes.
Sam,
Just so maybe.
maybe.
Because I'm just thinking, shouldn't it be in an escrow account
It wasn't an escrow account, and now we're coming to closing.
And an escrow account is handled by a third party for the transaction monies.
Okay, thanks for that. Here's the right answer, and then I'm going to tell you what happened, Sam. No, everything you said's right, Sam. The buyer, prior to closing, will have set up an escrow account. And so that 8,000 would go from that escrow account to the other escrow account, but it's still debit seller, credit buyer.
The title company has nothing to do with it, or not the title company, but the closing company.
No, it's still debit seller, credit buyer.
Okay.
What are good funds? Good funds are required at closing. This means the money is reliable, such as a cashier's check, electronic funds, or a teller's check from a savings or loan. Also review the definition of good funds in the Colorado contract to buy and sell. So at closing, we always have to use good funds, okay, when we're transferring money. The Colorado contract to buy and sell also has this exact definition in it for what good funds are.
I didn't get that. Try tapping above to edit.
That was Siri. She wanted to play also. She didn't sign up for the class. She can't stay. Okay, here we go. What is the certificate of taxes due? It is a county document which verifies the amount of taxes owed. The title company requests this from the county. It is used for the prorating of taxes between the buyer and the seller. So the certificate of taxes due is what the title company gets, and it provides them with that tax information, which we'll use for our prorations.
Todd, can I ask you a question?
Sure.
So certificate of taxes due is different from the tax lien certificate, right?
Yes.
Okay, so yeah, I thought it was the same thing.
Okay, what is the difference between a settlement statement and the 6-column worksheet? So the 6-column worksheet is what we've been talking about with those 6 columns to figure out how all the money shakes out. The 6-column worksheet is used by the person doing the closing to account for all monies. It's a behind-the-scenes document. There are debit and credit columns for the buyer, seller, and broker. Now, the settlement statement contains debits and credits just for one party. There's a seller settlement statement, which is debits and credits for the seller, and a purchaser's settlement statement, which are just debits and credits for the buyer. Okay? So typically, if you're representing the buyer, you'll just see the buyer's settlement statement. And if you're representing the seller, you'll just see the seller's settlement statement. Okay? Back in the day when you were responsible for making the 6 column, then as the listing broker, you'd see the 6 column, and then you'd make the seller settlement statement and the buyer settlement statement. What are the broker's columns in the 6-column worksheet? The broker's columns are used to reflect offsetting charges and lender activities at the time of closing. So when the seller is debited for his loan payoff, the same amount is credited to the broker because the broker cuts a check after closing and sends it to the seller's lender to pay off his loan. So the broker represents all third parties. Make sense? What is real property? What is the real property transfer declaration? So this is a declaration made at closing, okay? by the county assessor's office. It breaks out the personal property from the real property. And it also asks about financing, the financing terms that the buyer is getting. This form is then sent to the county assessor's office so that he has an accurate value of the real property for taxation purposes. So the real property declaration is a form which comes from the county assessor, okay? The county assessor is kind of like the county appraiser, okay? That's what their job is to know value so that they could charge property taxes. The real property transfer declaration splits up. It has the purchase price, $650,000, and then it asks the buyer how much of that $650,000 was personal property, and the buyer says, okay, 10,000 of it was personal property. And then it asks the buyer, was the property in bad shape, good shape, or great shape? And the buyer says it was in good shape. Okay. And then that information goes to the assessor. And then the assessor says, oh, the value of the real property was $640, not $650 for real property taxes, which was the real property value minus the personal property value. And that's how so that's his starting point for property taxes when they become due next year. So Sam, what's the difference between real property and personal property?
Real property is the physical structure on the land. Personal property is the property you can take with you
Okay.
or sell, but goes in the moving van.
Good. And James, is there anything you would change about what Sam said?
No, that's pretty much it. Not only the structure, but also the land that it sits on.
Yeah, that's what I heard too. That's where I would have changed it also. The land plus the structure is the real property. Yeah, I agree. That's what I heard too. Okay, so this is at closing. Our buyers at every closing are asked to fill out this form called the Real Property Transfer Declaration. So we'll want to help them in advance. And I always have a little cheat sheet ready for them. And then that way, when they get this form, they know what to put in. And generally, I encourage them to put as much as they feel is possible for personal property, because that'll lower their real property taxes. Whereas if they say real property was zero, 650,000 minus zero is 650,000, and that's what their property taxes would start at. But if they say their personal property is 25,000, then 650,000 minus 25,000 is 625,000, and that's what their property taxes would start at. Okay, so that's where it gives us an opportunity to show our value to our buyers. Okay, most agents don't know what to do when this happens at closing, so they just sort of look out in the space and let the title rep answer these real estate questions that they shouldn't be answering for us. Okay. What should a broker do if he sees an error in the settlement statement that benefits his client? CJ?
He still needs to disclose it.
Yep. License law requires that the broker verify the accuracy of the closing. Therefore, the broker must have all errors fixed so the final documents and accounting is correct. Okay. Lupe, your question number 1, are you ready?
Yes,
I'll
I
read the
guess.
question, you read the answer.
Okay.
The title company acts as a blank or the broker.
The answer is A. I don't know how to pronounce it, but that's A.
Perfect, Scrivener.
Scrivener. Yeah.
And Lupe, how much do title companies get paid to represent the listing broker at closing as the Scrivener?
They charge a lot. They charge for everything, like the owner's policy, the lender's fee, title documentation, recording. I don't know, like a lot of fees that they charge.
Do you know how much they charge to be the Scrivener?
Not as, is it $5? No,
It's $5.
$5. Yeah.
Okay, so title companies will, they sit in, so the listing broker is responsible for all the numbers. The listing broker is the one who's making sure this closing happens. They hire the Scrivener and they hire the title company to be the Scrivener and pay him $5. Now, why does the title company, why are they happy with being paid just $5 for being the Scrivener, Sam?
Because once they're in as the Scrivener, then they can the title insurance policies are where they make the money.
Good. Then they sell 2 title insurance policies. Tyler, what are the names of the 2 insurance policies that they sell?
It's the lender's policy, and then the other one is the title policy.
They're both title policies.
Okay. Is it the buyers? I know it's the seller protecting the buyer for
Yes. It's called the owner's policy.
the owner's policy.
So at every closing, the title company sells 2 insurance policies. Those insurance policies have one premium. They pay it at closing. So between those 2 policies, a title insurance company will receive anywhere from $2,000 to $6,000 just for those 2 insurance policies. The first one is the owner's policy, and that's the seller protecting the buyer from someone showing up later saying, I really own the property. The second one is the one that the lender makes the buyer pay, which protects the lender from someone showing up saying that they own the property. So why does the lender demand a lender's policy, Tyler?
The lender demands a lender's policy so that their money
Is protected?
Yeah.
Okay, how much do lenders typically put down? So how much do buyers typically put down as down payment? And what do lenders typically come up with, Tyler?
Is a buyer like 10 to 20%, so lender would about 80 to 90% of
Good. I think most of the time, buyers put down 3.5%, 5%, 10%, or 20%. That's what we see the most, one of those 4 numbers. Unless they're a VA buyer, then 0%. That means that lenders are putting down 100%, 96.5%, 95%, 90%, or 80%. So most of the money's coming from the lender, and so the lender's going to require a lender's title insurance policy. The title company at closing also charges the buyer and the seller to sit at that table and eat cookies and drink a soda. And they'll charge them each anywhere from $175 to $250 for that hour, okay? And that's called the presentation of the real estate documents. And then the title company will charge the buyer another $250 to present the mortgage documents. So Sam, what are the two mortgage documents in Colorado? Period. What are the two mortgage documents in Colorado?
Drawing
Okay, James,
I do not know.
that's okay. And Tyler,
No, it's the deed of trust and
yes. And what's the partner to the deed of trust?
the promissory note.
The promissory note. The promissory note is the little 1 or 2 pager that says your interest rate is this. You have 360 payments. Each payment is this. And then the deed of trust is the 33-page document that says if you don't pay, you don't stay. Okay, James, this one is for you. Assuming current taxes are $1,875 and the closing date is June 1st, how much will the prorated taxes be and who will get what credit and debit? Okay, everybody figure this out. James, you're first.
All right. Well, I guess I could just read the answers first.
You can just tell me the answer. Oh, yeah, that might help.
Well, it's B.
Whatever. You think it's what?
It's B.
Okay, you say that very confidently. Okay, Sam, what do you think?
for the, okay.
I'll come back to you.
Yeah, come back to me.
CJ.
I think it's A.
Okay, so James says B, CJ says A, and Lupe.
I will say B.
James
B,
and Lupe say B, CJ says A. Sam, what do you say?
credit the buyer. So, B.
B. Tyler?
Yeah, B.
CJ, you want to stick with A?
It's probably B.
Okay, yeah, so remember, taxes are in arrears. So they're going to be a seller expense. We know it's for less than half the year. So I immediately saw that this was less than half of that. So I knew that was the good number. And so that's what helped out there too. Okay, Sam, this one's for you. Ready?
All right.
Where will the commission appear on the 6-column sheet and who will be debited and credited? So I'll just leave it at that.
The seller with the debit.
If the seller's the debit, who's the credit?
To the broker.
Okay, Sam says seller, debit, broker, credit. Okay, Tyler, do you agree?
Yes.
CJ?
Yes.
Lupe?
Well, I'll go with everybody. So yes.
And James?
Yeah, I think that's correct.
So, yep, seller, debit, credit, broker. So at closing, the seller's paying the commission, and that's like 6% of the sales price or 7% of the sales price, whatever what was negotiated. There is no standard. The real estate commission really wants you to know there's not a standard. The real estate commission wants you to know it's a matter of negotiation when you show up with that exclusive right to sell, we're going to charge. And so we have a debit seller credit broker. And then the broker then will share some of that money with the buyers, the brokerage firm representing the buyer, and so on. Okay, Tyler. Look at that.
Darn.
So next week, so next Tuesday, we're doing the exclusive right to sell. And that's our 8-page listing contract. And so we'll be doing that Tuesday from 5 to 7. Any questions?
No.
No? Thank you, guys. Have a good Easter then.
Thanks, Todd.
Thank
Thank you.